Well, thank you so much for joining me today, Rodney. Looking over your sort of career path and journey, you've done a lot of interesting stuff before solo funds, and solo funds seems to be an incredible venture, and we'll get into that soon. But let's talk about your sort of journey and path before solo funds.
Definitely. Originally from Baltimore, made my way. I'm a graduate of Howard University and West Virginia University as well. Eventually, I started my career at Procter and Gamble. I was a brand manager there, and then fast forward to my first venture, which was Listener. It's kind of my introduction into financial services, but in technology as a whole. And then I made my way to solo funds. I think along the way I've done a lot of things, but that's the abbreviated version of my
What
past.
did Listener do? What was that venture?
Yeah, Listener. Honestly, it was a premise. I was the first marketer at Procter and Gamble to write patents, and I was like looking at business opportunities for the brand that I was on. And, connecting the opportunities of technology was something that I was just really good at. But one of those opportunities was just looking at how we were shopping as a whole, consumers, and I just had an idea that if I could create a better way to connect devices and share data between devices, that it would make shopping and things like that significantly easier. So Listener is actually in financial services. It's a wireless communication technology that allows for data to be shared between devices easier and faster and more secure. It actually uses audio that humans can't hear, but devices can actually decipher and communicate with each other.
Interesting. Yeah, that's that's pretty wild. So financial services sort of been around and been your forte for a little bit, it seems like. What was sort of the starting point for solo funds? Like, what was that? I know you have a co-founder on it. Like, were you guys talking, previously about starting, fintech companies, or was this something you brought to him or vice versa? How did the origin story for solo come about?
I was doing pretty well at Procter and Gamble, and I got that really young. I was 24 years old when I started at Procter and Gamble in brand management, post graduate degree, right? So
Right.
I was doing pretty well. Going and then when I started my company, Listener is now going to celebrate its 10-year anniversary.
Wow.
It raised $40 million. Investors like Visa. It's a great company, and it's going to have a great life, right? But I'm from Baltimore, and I shared a number of experiences with my co-founder, Travis Holloway, and it was literally one holiday season. We, connected, and we were just talking about the shared experiences of friends and family needing small dollar loans, and it was anywhere from $50 to $100, and when you're in those types of communities or family circles, and you're the family member or the friend that's doing a bit better financially, you tend to take on the burden of that type of family or circle need. And we really just got like stuck on that problem. And, we kept researching about it, and it became pretty apparent that it wasn't something that was just connected to the community that we were from. It was actually connected to most Americans, where most Americans can't afford $1,000 emergency and really live on pretty tight budgets. And fintech as a whole really hadn't addressed their needs in a way that we thought was equitable. And that was the premise behind Solo.
And Solo, just to sum it up for listeners, is sort of a quick sort of micro loan app where anybody can come on and, like you said, apply for $50, $100, and sort of anybody on the other side of it can agree to that, right? With sort of a few taps and just agree to, to loan them the $100 at, a small interest rate. And it's sort of widened that community rather than just a small circle of, family and friends. And some people might feel awkward, right, asking a family or a friend for money like that. Like, this kind of opens it up a little bit to, a wider audience where everybody can be assistive, right? And be sort of have the community be, all states and all people from all communities rather than just keep it local. Is that sum it up correctly?
I mean, you definitely summed up the major points, right? Borrowers coming on our platform, they have complete control over their terms. They self-select how much they need, what they need it for. and ultimately what they're willing to pay for the loan request, and they post it to a marketplace, right? That's visible across the U.S.
Okay.
And then, anyone that that would resonate with that request. Maybe they resonate with the reason. Maybe it's for a return, but mostly it's to make an impact, like direct impact to their fellow human. And that's the community that we've created.
And I don't know if this was a plan in the beginning to do so, but was it just part of the platform that it could eventually like eliminate maybe these payday sort of loans that have such high interest rates and really are not healthy for communities, right? And not healthy for borrowers. Is that a main thing that the platform focuses on, or that's just kind of going to happen because the platform is there and that's just an ancillary positive that comes from it?
Those are major purposes of this platform, to be transparent. Like, like even your latter point, building communities. It was super important that the entity that benefited from this behavior were part of that same community, right? That's how you kind of redistribute wealth, right? As part of our B Corp certification, it became apparent that 82% of our members actually reside in underserved zip codes, according to the U.S. Census. That means lending members and borrowing members live in the same neighborhood. And that was like so exciting to us, because that was one of the things we wanted to go out and accomplish, because that's what it's about, right? The problem, sometimes I like to articulate, the problem with payday and other types of loans is that it's not just about the APR, it's about the fee structure, it's about the design, it's about the fact that there's more of those institutions and those communities than row banks or even McDonald's, right? And when they profit off of the community, it doesn't come back to the community, right?
Great point.
And that's the really big problem. We understand that fees need to be charged for services provided.
Sure.
But you have to figure out how to redistribute it, and that's one of our biggest things that we were very, very excited about.
And when you talk about, because look, there needs to be, like you said, it needs to be fees. Like, it's a company, it needs to be, sustainable. Like anything else, it needs to thrive as a business. So when kind of looking at the business model, what were there the traditional in the industry, like the APR and the fees, like did you try to reassess that and maybe build that from the ground up?
We believe that you can't teach financial literacy. You have to empower financial literacy. You have to put it in their hands. So, for example, in solo, there's no default fees. There's no mandatory fees. Everything is optional, and everything is based and controlled by the borrower. So the borrower has complete autonomy and control over the optional tip and donation that he or she can choose when requesting a loan. It's even optional on repayment. Now, there's a couple of things that have happened in this social experiment that we did.
I bet.
Because I would tell you, every VC in America didn't like that. They were like, this isn't going to work. But we are teaching people the cost of capital. What happened was that as borrowers used the platform and were paid on time, they naturally selected less to pay for the loan request on their own. We didn't suggest it. We didn't recommend it. It was naturally. So we every single request, they actually pay less, which is they're learning that, listen, wait a minute, if I pay on time, I should be able to get this cheaper. The other aspect that's really important is that repayment on time is something that is completely gone from communities that I know. When you think about traditional credit products, they really want you to pay over time. They really want you to hold a balance and pay small payments consistently over time. I think, but the cheat code in the credit industry is not paying over time. It's creating a balance and paying it off relatively immediately, right? And then, consumers who understand that, they only spend credit on things that they can ultimately repay in a short period of time. Those are the consumers that have really good credit. And we wanted to figure out, how do we teach this community that that's what you should do? You should only ask for what you can pay in a relatively short period of time. And then you should honor that. And then the next time when you ask or you need that capital, it should ultimately be cheaper. And that was our social experiment that we proved. And it goes against all of the rules of traditional models. I think when you're, that's one of our things that we always talk about, right? Like we like intimately know and breathe the average American, the coffee barista, the bartender, the DJ, the guy in the Uber, the woman that's cleaning our houses, right? We connect more to them so than who we go to work with every day.
When you talk about credit score and credit history and traditional ways of that being related to the world or being calculated, does the platform then build a person's credit up over time? Like, is that a data point that these credit score companies will look at as acceptable, right? And maybe even broader, like, what is your thoughts on like credit scores in that whole sort of world? Because it seems like you maybe could disrupt that in a way as well.
Yeah, definitely. The right answer is not yet. I will tell you that we continue to work, or we've continued to attempt to work with a number of credit bureaus to try to leverage the activity on our platform to build credit. I will tell you though, we definitely have an innovation coming out where we believe it's going to be accepted. So we will start to have a credit builder product within the company, not today, but soon. Credit bureaus, I think, have failed many Americans, and especially in this particular market segment. And I'll give you two reasons. For whatever reason, our platform has 3 times better default rates than what traditional lenders to our same market has in comparison. And obviously they're using credit bureaus and we're using something else. So do I think we're smarter or better than credit bureaus? Probably not. I just think that we've understood the market better and we've built a model that is learning faster. So what we use is banking data. Thankful for Plaid and the number of open banking companies.
Yeah, man. Well, that's great.
Just be transparent. There's no like super rocket science here. We're just leveraging Plaid's banking data for the past 24 months of a user, and we're taking into account their cash flow. We used to internally, before it ever launched, we would say we need to understand their hustle. We need to understand their ability to pay a bill. Like where are they getting money? Where can we see that they have some hours at Macy's? Great. We're seeing it seems like they picked up. They started doing some rides in Uber. Wait a minute. They're also selling T-shirts on Etsy. Right? Oh, wait a minute. There's a deposit from mom. They have a mom. Right? Of course. But you got to understand that's the real American. It's
for sure.
Always like so simple where you have the great job. No, it's not that. So we wanted to take that all into consideration to understand your ability to repay. And that's kind of what we did when we built the score. And then over time, it continues to get smarter with every cohort of lending that the platform is enabling.
Is there an age limit? Because it seems like this is a great tool for young people, right? Even like, high school or college. And I mean, I guess it matters if they have a bank account or not, but it seems like a great learning tool because, growing up, like finance it's not taught, right? Like, I mean, just where the schools I've been to, and I went to 3 high schools and like 4 colleges, man. I've been through the education system in a lot of different levels. And unless you even know what finance is, like you would never take that course, So like we come into the world very sort of uneducated around what finance is, right? And so like there's also an education opportunity, I think, here to onboard, individuals to do what our education system just has not done. Do you see that as also a win that the platform could actually utilize?
100%. I mean, that's today the minimum requirement is 18 and a bank account. We believe that children are grossly underserved as it relates to financial services, just for the same reasons that you have. Our financial services as a whole, they care about deposits. So, as a kid, you're not going to have a lot of deposits. So it's not a lot of banks running to you to start an account and to teach you healthy accounting and account behavior and things like
Right.
that. So, but at the same time, for what the kid needs or wants or that microloans could fulfill that, right?
Mm-hmm.
It's like, and how could you again offer things that allows them to understand that, hey, things have a cost, things have a commitment. That means you have to repay it back, and you're rewarded when you keep that honest and transparent. Those are like the basics of life. Right?
Yeah.
Like like you if a kid teaches that, they'll learn to not steal when they don't have it. They'll learn that if I do need it, it needs to warrant not what it actually costs, but what it truly costs, which is the total cost, not the APR. I think APR is is inconsistent when you think about total cost. If you ever bought a house, that was like my biggest surprise. Was like, what are all of these other fees?
Like, so many.
That's not the total cost. That's not my total cost. Why are we just talking about APR? And these are just things that I've just learned over time. And really, I think this is our social impact organization. This is our social impact company. We're going to try to bring products and services to this market in ways that are simple, but design and teach good behavior. But we want them to get into traditional services. We want them to have traditional things. We're just going to make it simple, and we're going to make it honest, and we're going to make it transparent.
How has the response been thus far from the community, from both, borrowers and lenders? What's some of the feedback on how this has sort of impacted their life, right? I mean, when, something like this, like you said, day to day, just to make your life easier in some little way, is like a huge win.
Yeah, I mean, I will tell you, to be still a tiny startup with very, very limited funding, it hasn't been easy for us for many reasons. And I think we've done an incredible job at meeting our consumer. I think from a borrower rate, we hover around the 85 to 90% consumer satisfaction mark, like whether it's like overwhelmingly positive. We get tons of letters, tons of thank you notifications on just how they feel empowered, how they feel equitable, how they feel control. All of us, how they feel like they have a choice, right? Like it's all of these things that you can't necessarily articulate. And I would tell you, there are other things that's also interesting about it, is that they're learning through us. They're like learning the total cost of something. Like they're like, wait a minute, this, I don't want to go. I'm smart enough not to go get a payday loan. And I'm smart enough not to overdraft or increase my credit cards to max. This is a smarter choice in the overall scheme. So things like that. I would tell you from our lender's perspective, which I am truly thankful for the individuals who have stepped up since the beginning to fund these loans.
Yeah.
I would say, in the beginning, it was tough. And honestly, most of our lenders that continue to stay, they were just making an impact, because ultimately they were having more losses than gains. And we were, and within that though, we innovated. One of our product innovations in 2020 that changed the trajectory of the business was the creation of something what we call lender protection. And lender protection was our attempt to stabilize our marketplace and make our marketplace safe. If you think about marketplaces like StockX or Etsy or even eBay, they have like a duty to make sure that you get the product or service that you have been contracted to get, right? And that's what our attempt was. So for a fee, in the event that the borrower doesn't pay you back on time, Solo steps in and credits that particular lender. I think number one, I think lenders were shocked. It was the first of any type of, think of anything that you've ever invested in, stock market, crypto, Bitcoin, and they all say, hey, listen, for a fee, you can opt into this just in case you have losses. I'm gonna make sure your losses don't. you don't have losses. And so like, we're really excited about that. That definitely significantly changed the trajectory of the company. We've grown tremendously. I think we're nearing 200,000 loans.
Wow.
And that's a testament. With our tiny team and our tiny funding, that's only a testament for organic growth.
Crazy.
Like, we don't have any big marketing campaigns. This is people telling people and getting really excited about it because, they were stuck on the side of the road, needed a loan. Some person from Idaho gave them that loan. Crazy. And they're excited about it. Yep.
There's, micro loans and sort of micro funding has been around for a long time, sort of in other parts of the world, specifically like developing countries. Like, there's parts of the world that this has been tested and done well, done bad in some aspects. Did you look at other parts of the world sort of, doing this, and maybe that have been in this sort of microloan industry for decades now? Was that anything that you looked at to try to take something from?
Yeah, I mean, we did a lot. We looked at models like Tala and Branch. We looked at there's some patriarchs to micro lending out of Southeast Asia, as well as a number of other companies, and we definitely took those into consideration. But before we ever wrote a line of code, we participated in, I think it was 3 accelerators, making our way across the country.
Nice.
Literally, we were in Columbus, Ohio, in the FinTech accelerator, then to Kansas City, then to Cincinnati, Ohio, then to Kansas City, and it was about from idea to launch. It was probably 3 years.
Oh wow!
We actually spent a ridiculous amount of money with legal before we ever wrote a line of code. It's so hard to innovate in the United States. And that's the ultimate reason why I think micro lending as a whole, or peer-to-peer lending as a whole, we're challenged in the United States, because it's really, really hard to innovate. And it's hard to innovate because of the regulatory scrutiny. It's kind of like counterproductive to say, well, we want innovation. We want you to build products of financial inclusion, for example. And that's essentially what a micro lending product is, right? Sure. It's for a group of segment that needs to be included in the financial system that have been excluded. But they say you have to fit into the traditional regulation that has been set forth before. You have to sit in a traditional model. And that's doesn't actually make sense, right? Because whenever these legislations and rules were created, and whatever part of the centuries ago or whatever, I'm being dramatic, but
sure. The
point is, when they were created, they weren't created thinking about all Americans.
Right.
And that's just transparent. And I mean, you tell me if you like. I would go to any regulator, to talk to any governing body, and do you believe that when this rule was written, that it took into account lower income? It's not just about ethnicity. It's about lower income Americans, right? I went to school in West Virginia. I went in Appalachia country. I know Appalachia country, and I know Baltimore, and I would argue that they were not taken into consideration. So the biggest problem is that's the biggest problem. Is just that the regulatory environment is just not designed for products like this. And we hope that we can help create frameworks for business models like this, create opportunities for others. We can't fix this problem alone. We need many players to truly even have a chance at fixing this problem.
Yeah, well, part of when you see these, fintech solutions or fintech companies, they often have to raise 20, 30, 40 million out the gate very early on to deal with sort of whether it's regulatory, systems and lawyers, and making sure that part is always taken care of. So it sort of eliminates a lot of people from the playing field, just even from a founder perspective. If like, I have to raise all this money just to like start at first base because of the regulatory environment. But I think that hopefully things like Plaid, Stripe for payments, and there's a lot of different things coming out that allows at least the initial idea to sort of get looked at and say, hey, can we do this? Can we do that? I'm hoping that the regulations and the regulators just start to see that a lot of the barriers are kind of taken care of upfront by these bigger sort of platforms like Plaid, right? It kind of, you don't have to go build that infrastructure. You just need to build on top of it. And Plaid can maybe handle a lot of the regulations for you almost because they're kind of handling everything. And you sort of don't deal with like the bank accounts and stuff like that. You're just kind of building on top of their infrastructure. So do you see it getting better from a regulatory standpoint?
Yeah, I mean, transparently, right? I mean, today we wouldn't have had a chance to do what we're doing today 10 years ago,
Yeah.
let alone 70 years ago, right?
Right.
Because we're building on on these fintech infrastructure companies that are making it easier. And I think that's what, to be transparent, some of the first fintechs that are created by underserved communities are either about to launch or have launched like us, but none of us existed 5 years ago, right? So I do think they're making it. It's become easier. It's still a significant financial commitment, right? When you think about other startups, other ventures, even my first venture, I was able to do a lot more with. It's an idea, so a group of bright engineers can get that done. There's significantly other considerations you have to think about in financial services. There are approvals, right? Even Plaid doesn't necessarily. Everyone that wants to use Plaid, you just can't use Plaid.
Right. No doubt. Yeah.
Right. You have to be approved if you're using one of the banking as a service providers. The sponsored bank has to ultimately approve. And there's a number of approvals that have to happen, and that can be a challenge and take time. And I mean, I would think we were lucky to partner with the infrastructure companies. We're like a case study for Plaid. We're on their website.
Great, man.
We're gonna be. We're like a case study for Microblink. We're gonna be a case study. We're a Visa Fast Track program.
Great.
And we're case studies because everyone said this wouldn't work.
Yeah, I think that and to do it with all organic growth, right? That's also really, really interesting part of this, because a lot of companies have to spend a lot of money on marketing, getting a user base. They have to use Facebook, they have to use Instagram, Snapchat to get users to their consumer app, right? Or just their app downloads. It's like, how do we spend enough money just to get downloads and users, right? Where when you prove organic growth so early on, I mean, that is such a difference maker. It's just so different from any other type of product when you have such early adoption like that, especially in fintech, man. Like I said before, I mean, usually these fintech companies have to raise so much money, just to get users to use their product. It's awesome. It's almost like a commodity at this point. All the different, like, just fintech apps that do banking, right, as a service or something like that. But nothing like this that I've seen sort of exists from the organic side of things, where you say, hey, we're going to go community first, build this as like a grassroots thing.
Definitely. And sometimes it's interesting how, like, doing things out of necessity,
right,
it makes you do it. My co-founder and I sometimes we're so frustrated because we're bigger by consumers, right? We're bigger by our members. We're much bigger than these fintechs that are raising 30, 40, 50 million dollars.
Right.
But we go to a team that's much tiny. Like we hired our first growth person. Our first growth person has been at the company for, I think she may be reaching her 3 months. She's the first growth person that we've ever hired. We only have one person like her in the entire company. She does everything called marketing.
It's right? But I always tell people, like, Instagram sold for $1 billion of Facebook and it had 12 employees, right? Sure. So now with the tools that we have, it's just about, product market fit, getting the right team together out of necessity, like you said, believing in what you do, knowing that on the ground it works, not just looking at data and saying, hey, this is an empty space in the market that we should build something for. It's actually seen in the real world of like, there's a huge problem here and hole in the market, because you could see it physically day to day, right? And touch the people that it's affecting. That's much different, I think, than a lot of these other, fintech companies out there. I want to end on just the last question a little bit about the future. And like you said, like first growth hire, like very early stage right now, but it seems super promising. But let's look maybe 3 to 5 years down the line. What does success look like for you and the team?
We want to make a serious impact to everyday Americans. We don't like to say that like we have a low income problem. We have like we're like sometimes proud, and when we compare ourselves to other countries, we don't think we have a lot in common to third world countries. But I like to think of the everyday American has more similarities to lower income countries than we think. And we used to say that America has the largest and fastest growing emerging class. So like we want to make a real impact there. We want Solo to be much bigger than a financial company. There's never been a time that you've like said, I wanted to go buy a JP Morgan Chase and wear it around, right? There isn't a financial institution that has probably really nailed that, right? Because at the end of the day, you don't necessarily feel that they have your best interest, right? And Solo has a chance to be that. We dropped an apparel line, for example, in August, and we sold out. Our members bought it.
Wow!
Right?
Love
like
it.
That's weird. That's not weird. That's because they care. Like they're like, even though I borrow from, like this is the type of thing I want to get behind. So like for us, we want to redefine what fintech and financial services means to everyday Americans. We want to do that as broad as we possibly can. But I will tell you, what I'm ultimately getting about other countries and global is that we're going to go global much faster than anyone ever thought and ever think. Because if you think about us in just like raw business things, we've had product market fit for years if we're growing organically. Regardless if the investors don't understand it, regardless if the US market has challenges with innovation, there's other markets who don't, right? There's other markets that are screaming for innovation and saying, come here, help us think about financial services differently. And what we believe is that we've created a better marketplace for lending. We've created a better micro lending product. We've created the best peer-to-peer model. We've created the best opportunity for lenders to make an impact, or individual consumers to make an impact and also make a return. So these types of things are going to resonate in multiple countries, and we want to go there and also provide the service that we've provided here and do good in the way that we've done here.
Amazing, my man. I mean, absolutely. Just, I think it just has such potential, and it just shows like what innovation is possible when it's available to everybody, right? And that's the beautiful thing about technology, is that if you're sort of willing to learn, access to the internet is becoming more and more available to everybody, and it opens up your world to an entirely different thing. It helps you search for things like this, right? Like you said, we could never build this 20 years ago. You can never even search to even know how to build it probably 5 to 7 years ago, right? Now you can search on like, how do I build a fintech app, right? Like, what's the tech stack to do that? And there's available resources out there. So I just think that whether it's Plaid, whether it's any other of these platforms, like you had mentioned, there's such a accessibility now for people to build, startups for their communities, for the problems that they see. And like you said, not just here in America, but globally, there's such a thirst for technology products to help solve issues that, the government has failed to solve for them. Founders can do it. These products being available is an amazing thing. So best of luck to you and the team, my man. Keep up the great work, and congrats on the B Corp certification, and all upside from here.
Awesome, man. I really appreciate your time, and definitely thank you for letting us tell our story. So I really appreciate that.